Hi everyone, I'm Lorenzo Di Mattia, manager of Hedge Invest Sibilla Macro Fund. I wanted to tell you what we have done in July and give you the outlook for the rest of the year. July was a positive month, closed up about 50 basis points net for the investor. We were positioned in precious metals, although small, and in a basket of US stocks. We feared a correction would start in July, and we kept the book pretty small, although we didn't short yet because our model was not confirming our bearish view. Most of the positions worked well, were profitable. We got out from 2/3 of the precious metal stocks because gold and silver reached one of the most extreme overbought conditions in the last several years, although we don't think the bull market is over, so we'll look for new entry points there. And right now the leadership has been in the hands of technology again. The story is, we all know by now, the technology has enjoyed accelerating growth because of the virus. So not only didn't get hit by the recession, by the deep recession globally, but many companies saw accelerating revenues. Now, there are two issues. First, the valuations are crazy, like similar to 2000, in some cases even higher. The mega cap are lower than the one in 2000, but the mid cap are actually higher than 2000. So it's really extreme. And but importantly, there is some stuff that's happening in technology fundamental that's one-off. It's just happening once, and it's not sustainable. First of all, the online shopping and the stay home kind of activity has jumped, but it's not a sustainable growth rate. Obviously, it's due to the fact that people stayed home. So even if people continue to stay home, the growth rate is gonna slow because the pickup has passed. And then if the virus is gone, is gone at some point, then will be even a drop. But besides that, there's been a double counting in usage, for example, of cloud, where at the moment all offices are still paying for all the software and cloud services. And to this, people working from home, they started new contracts for the cloud and the software and new applications. Now, companies will rationalize this resource and decide which portion of employees will have to work from home versus the office, and they will obviously eliminate a lot of office space, so that will be gone. Plus, the workforce is obviously a lot smaller. We have unemployment rate, in the range of 10, 15, 20%. So the labor force is much smaller overall. So there will be less technology usage because there are less people working. So right now, not that is apparent, but at some point it will come out. The reopening is not going that well. Unfortunately, the virus is still with us. If we reopen too much, it's coming back in several areas, and when it's gone, we reopen, and then we have to close again. So it's sort of there is a ceiling beyond which we can't reopen until the virus will be completely gone, which we hope will happen soon, but it's not yet the case. The bottom line is that we will have at some point a second wave of layoff and defaults, and technology will stop growing at this pace. With these valuations and the cash burn that companies have experienced outside technology, there will be a lot of defaults. And there is a significant downside in the market, especially with these valuations. We're waiting for some signs from credit and our models to short, so we're still on the sideline, but we believe there is significant downside going into the fall. And there are also election risks. This is not the biggest risk in our opinion, but it's another negative. But more importantly, it's just that the recession cycle is at an early stage. So we're more at the beginning than at the end of the cycle in terms of defaults and layoff. Precious metals will remain in a bull market, so we're looking for a new entry point once we expect a month or two of consolidation. And we are at the moment, watching the dollar, it's very oversold. We're probably short on the bounce, but the yen looks good, better than other currencies, and the euro. Thank you very much.